Hello guys, welcome to Mind Money Muscle YouTube channel. I hope you guys enjoyed my first video, which is related to where to invest and how to pick a high quality stocks for investing and how we can create wealth with just 5,000 investment per month. Now we are continuing the series by learning little bit more about what is equity and what is ETFs and what is the pump and dump technique, which are the things I mentioned in the previous video. And we are going to learn more about these things. And these things will help us in the process of investing. And in the end of the video, I have picked around 10 good stocks from my study. And you no need to invest on the same stocks. You do your study based on the screens I have provided and by validating them in the Moneycontrol, and you can do the investing. Let's get into the content. I'm sharing the screen. Once again, I welcome you all for Mind Money Muscle YouTube channel to grow smarter, richer, and stronger. Today's theme is money. So let's know more about equity. When you buy equity, you own a small piece of a company and you are a shareholder. It means when I have a company and I want to grow it, means I want to expand it, I need some capital. To raise that capital, I need funds. So those funds I will get from the market. So to list my company, I will go to the SEBI, which is the regulating authority of India. So I will submit my complete report to the SEBI and they will give me some valuation. Based on that valuation, I will give from some percent of my company to list in the market. So that listing process is called as initial public offer from company to public. So that time everyone invest in my company. That money will be invested for the company's growth, purchasing new equipment, expanding in other cities, and launching new products in the same company. This all comes under the expansion process. Whatever the gain I will get in the upcoming years, that gain will be transferred to the people who invested in my company. So it is very important to choose a company which have a potential to grow. Even by buying a small slice of a share of a particular company, you will become a owner of that company. So use your money to create wealth instead of spending and instead of getting trapped into lifestyle inflation. We'll know more about lifestyle inflation later. And here you can see the shareholding pattern of a company. Some company, this is a NMDC company. Here you can see the entire 60% holds by the promoter. Promoter means the one who owns this company, entire 100. Then they given around remaining around 40% is given to the public. Here public holds 10.46%. FIIs hold 11.72%. DIIs hold 15.13%. No need to confuse with the FII, DI. Foreign institutional investors, domestic institutional investors, others means the big clients. So this is the overall shareholding pattern, which is very important in the fundamental aspect. You will get to know more in the upcoming videos. ETFs. Think of ETFs like a basket of stocks. When you buy one ETF, you own a slice of many companies at once. Here you see a basket. Let's say you are investing in a company. It belongs to one sector. So maybe that sector didn't perform well or that company didn't perform well. All the investment you made will maybe turn into a loss. But just let's say you invested in multiple sectors and multiple companies like a Nifty 50. There are huge chances even one or two companies didn't perform well, the remaining companies will take you towards the profit zone. In a similar way, ETF is one company who invested in all the 50 companies. So if you own one part of ETF, you are one of all those 50 companies, means you are more secured, less risk. Means if you are investing in one company, it's a risk. But if you are investing in one company which hold several companies, you are in a safe zone. Means constantly, as long as Indian government, Indian market, Indian economy grows, your money grows. So for safe side small amounts, you can keep on investing in ETFs as well as equity parallelly. Like I planned 3,000 in equity, 2,000 in ETFs. So here, see, this is what is pump and dump scheme. Actually, it's not scheme, it's a trap. I believe you guys are slowly entering into the market. So it is very important to know about the traps, because if we know about the trap, we can escape from it. Otherwise, for every beginner, every beginner in the investment must fall into the trap. At least 5 to 7 friends of mine who are investing in the market, all were trapped here. Example, Suzlon Energy. There are several companies, Reliance Communication and Future Consumer. Even the people who now earning good amount of money, but they were trapped in this pump and dump technique, and they are not recovering their money, whatever invested in those particular companies, it's gone already. And let's get into the topic. Okay, this is pump and dump technique. Here you can see the share price. Let's say a company called a market valuation, means some price face value around 2-3 rupees. 3 rupees anybody can invest. A beginner, just to try, he will invest around 1,000-5,000 rupees here. It's a good amount. But there are some big players, means who want to manipulate the market. They will invest here around 1 CR, 2 CR, and they take this price over a period of time from 3 rupees to 1,000 rupees. And the normal people think like, normal people in the sense retail investors like you and me, we think like, okay, this price is going high and maybe this company is doing good, I will get the profit. So in the way, maybe someone purchase here, someone may purchase here, but they all are trapped because the big investor who invested crore here, they're going to exit here. So once they dump all those shares here, the price of the market will go, that stock will come here. So you see, whoever invested here at the peak will be in the huge loss, and this value never go to the up. And you will stay here for years in the hope of this price may go up. It may go up, the big investors again enter here just to manipulate. That time you may exit at a nominal price, but at the same time some new investors or beginner will trap here again. So it's a endless cycle. So please aware about this pump and dump technique and invest carefully, learn before investing and watch my videos. And how this happens, means how this pump and dump technique happens, how they can manipulate the price of a particular stock. It is very old technique, very easy technique. For that you need to understand supply demand. Let's say onions in the market, sometimes its prices go high, sometimes come down because of artificial demand created by the market vendors. Those guys hold the stock in their godowns and they create a lack of supply, less supply, and artificial demand, so price will go high. In the similar way, they will increase the manipulate the price by increasing the demand and decreasing the supply. To know more better, let's see this curve. This is a red color one is the demand curve and blue color is the supply curve. Just consider few points. If supply is more and demand is less, price will be low. Supply is more, demand is less, price will be less. So like here supply is more, demand is less, so price coming down. In a similar way, demand is high, supply is low, price is high. So demand always gives you good price. So be always on the demand side. Create your own demand by following my YouTube channel. Just hit that subscribe button. And another thing, if supply is high and demand is high, this is the when the company's fundamentals are good and price is going high and supply also going high, then it is good. Supply and demand will give you good price. Parallelly, they will increase and you will get the good price. No need to doubt every company which is giving a good rally towards means a higher price, and you need to no need to think whether it's going to fall, I need to exit here. No, nothing like that. Just see, is supply is continuous, is demand is continuous, then you can hold it. You can get a good price because that company performing better. But if demand is high, supply is low, and price is high, there might be chances it's some manipulation. And you don't need to follow this media hype, speculations, and all other things. Just follow this 5x5 formula, which I have explained earlier video. That most 90% it will help you to get out of the trap. Means it will give you good performing companies, and those market capitalization is more than 20,000 crores. It means it's too tough to manipulate that price. So be careful while investing in small caps. In small caps, manipulations and speculations are inevitable. So most likely to invest in more than 20,000 crores as a market capitalization. Okay. Next. Okay, these are the major picks. My major picks for this Monday means I did all those steady screeners, means 5x5 formula I have used. And these are the list of companies I got. I use some other techniques also. So these are the 10 stocks I'm going to invest. See, I have only 5,000 rupees. I can't invest in all these 10 companies. So where I going to invest? And what is the right time to enter into the market? What is the right time to exit from that stock? This is very important for an investor, especially for the short-term investors. Let's say I have shown you already this value. Let's say instead of entering here, you entered here and you exit there. So it is a huge profit for you. Otherwise, instead of entering, you entered here and you exit here. It's a huge loss for you. So how to know where to enter and where to exit? If you want to know where to enter and where to exit, just write in the comment section. I will make a very good video to understand where to enter and where to exit with the technical indicators, which is trustworthy. And one more thing, NMDC, Indus Towers, NTPC, Castrol India, Infosys, Coal India, Wipro, CCL, Sonata Software, and RR Cable. All are good companies. Still, you need to do your homework. You need to do your study, and you need to take your financial advisor and all. And this video is completely for educational purpose. Don't make any investments just based on this video. Do all your careful study and invest. Thank you.